Welcome back to BestProp4U. Today we are diving into gold, which has enjoyed a substantial upside run throughout, I would say, the entire August so far, which is coming near an end. Recently breaking out from 4,300 area, 4,500, and of course reaching 4,700, a 3-month high, which has been heavily fueled by fiscal and sovereign debt concerns following the US Treasury's decision to double its bond buying operations to $4 billion per auction. That came last week. And 10-year yields, of course, remained elevated near 4.7 and the 30-year yield above 5.2. That means that investors are increasingly turning to gold as the primary hedge against this debt stress. And what seems to be a broader de-dollarisation. Middle situation also keeps a solid geopolitical risk premium beneath the market, while crude oil pulled back slightly. Tensions in the strait remain unresolved. Today, however, we do see that gold, is seeing a modest pullback as the firmer US dollar and prevent position ahead of the US PCE inflation data and also Nvidia's earnings prompt some short-term profit taking. So what we are essentially looking at here at the daily chart, very important, that we came up to 4,700. This is not just a random level, it is a round level, but as well as a 50 Fibonacci retracement of the record high down to 3,940 dip. So if we measure this entire leg, it's exactly where we currently stopped. The daily median Bollinger Band currently rests near 4,340, and as long as price remains above that level, that is a baseline, the macro structure stays bullish. And the thing is, we also have an RSI, of course, coming into overbought territory at the same time, right? However, what I'm expecting here, a pullback, a short-lived pullback, and potential move all the way up to 4,900, which happens to be not just the golden Fibo, a round level, but as well as the peak that we reached back in April. So I'm expecting a short-term pullback. Why? Because ideally, we want to see a divergence forming here. Okay, so essentially, or perhaps potentially, something like this with prices extending beyond 4,700 and with the RSI, of course, coming below the previous level at around 73. And at the same time, let's not forget what we might perhaps be experiencing here, right? Perhaps we see this pullback go to 61.8. We will have a potential double top here, not the official double top formation, and a drop to 38.2, which would essentially perhaps turn this into what could be seen as a cup and handle pattern. Okay. Now, dropping down to the 4-hour time frame, as we always do, we get a much clearer explanation for today's dip. Multiple divergences, and from there to there, which is too far to be considered, one might say, but still, we've got multiple divergences over here. And now we are currently testing the support of 4,600, which is the median Bollinger Band. What is important to mention here is that gold has formed a 5-wave impulse. Okay, it could actually be an impulse within an impulse, which means, you know, this might be 1 and 2, 3 and 4 and 5. So we're still looking at the larger 1 wave. And when, of course, we do have 5 waves going up, then the technical picture means that, you know, there is further upside, but we are kind of slipping back to the original let's say leg, And if we were to assume this accelerating move and drawing a accelerated channel by connecting waves 1 and 3 over here, we're going to see that we just actually slipped back below this acceleration channel. So we could go all the way down to 38.2, and this still, in terms of bias, is going to remain bullish. Actually, in terms of bias, is going to remain bullish as long as we are above the 50 Fibo at 4,300. Now, this technical divergence, of course, suggests that the deeper correction towards the lower bands, which is around 4,500 or so, and we're just currently sitting at 4,600, could play out before the uptrend resumes. So if the US dollar strengthens further, gold could pull back towards the 4-hour support. However, as long as price stays contained within this broader ascending channel structure and even the 50 Fibo, then the bias remains bullish. So if the pullback resolves quickly and price pushes to fresh highs above 4,700, while the daily RSI also stays under 70, watch for an eventual daily divergence to form, the one I explained just earlier. And finally, just to zoom in also on the 1-hour time frame, and perhaps even contextually important to mention, if this is the 1 and the 2, oh, excuse me, I didn't grab that. The 1 and the 2 and the 3. We came all the way up to do the 2618 Fibo, which is an extended wave 3 if you asked me. Okay, and if we do use these same waves for the net distance through, and we're going to look, of course, at the internal structure because this is our 1, 2, 3, 4, and 5. We are pretty much just testing currently the 61.8 territory. Okay, this was an initial false break, and now we're falling back within. Okay, and of course, on the 1-hour chart, you also see consecutive divergences at play over here, right? Consecutive. With prices currently pulling back to test the 1-hour support of 4,600. This is the bottom bullish bands, okay? But if we do look at this from a structural perspective, our next support is over here, structurally speaking, which comes exactly at the 38.2 Fibonacci extension that we just showed, connecting waves 1, 2, 3, and 4, the net distance through all of these waves actually. So the trade plan bullish scenario is when, we look for buyers to defend the 4,500, well, I will even say now 460, but also for 530 is a level for defense, or even the deeper area, which comes at the 4,450. A bounce and reclaim of 4,650, and then of course 4,700 would eventually open the door to 4,000. Let's see, 850, which is the 100 Fibo. Okay, and let's not forget on the larger time frame we talked about the 61.8, which was at 4,900, right, of the entire leg to the downside. And in the bearish scenario, we're looking prices to break below 4,520 and 30 or so, and expect an extended correction towards 4,450, and then perhaps this double bottom here around 4,300 or so plus. With the daily median line, let's not forget, sitting at 4,340, which is the ultimate line in the sun. So manage your risk carefully ahead of upcoming US macro data and corporate earnings, and trade level to level.